Hey guys, David Robinson here. Welcome to the Apartment Investing Journey. Another great episode for you today. As usual, we got a wonderful guest. I'm excited to have Vish Muni with me today. Vish, how you doing today?
I'm doing good, David. Thank you for having me on your podcast.
Absolutely. Vish is the co-founder of PGL Properties, a commercial real estate investment company, extending investment opportunities. He has over 24 years of experience as a small business entrepreneur, IT professional, a fitness enthusiast, a real estate agent, and a full-time multifamily apartment investor. He started as a real estate investor in 2009 in single family and transitioned to multifamily investing in 2019. Vish, this is a very, very short bio, as I always say, and our podcast is all about the journey. And so there's a whole backstory to how you've gotten to where you're at today and what you're focused on today. And so we'd love to hear about that. If you don't mind, let's back up. Let's talk about what you were doing in the past, a little bit about your background, and let's talk about this transition that you've made into the commercial multifamily space.
All right, thank you, David. And so I started my journey is I was an IT professional for 20 years, and if you heard about a CRM, customer relationship management program called Salesforce, and that was one I was specializing in because I love how you have a data flow from the time I have a contact and the process of staying in touch with that person and setting reminders, and that itself is a program by itself. And that was really exciting for me. And that got me in touch with all the people I'm working with and also made a business out of it. So I was a certified Salesforce admin and I had a business around that, and with primary focus in working with engineers on a temp basis and helping them get onto projects. So that's what I did for 15 years. And when we moved to Texas, me and my wife, we got married in 2005, and we moved to Texas because my wife is a full-time doctor at the VA, and she's born and raised in Texas. So that is what brought me to Texas. And when we came here, we were looking out for apartments all the time, and we were staying in an apartment. And we did come across something very interesting, that is a duplexes. And we took a look at them, and we liked the fact that it looked like a single family home, and you have a privacy, and nobody's above you or next to you or behind you. You have a backyard, you have a carport, you have a garage, and we liked that fact, the idea that you could live on one side and rent the other side. So that was the idea which all got us all started. So me and my wife were really interested in real estate. So we set up a company called, this is the most exciting part, called Duplexaholics. So that is when it started in 2009. The business plan is very simple. Buy one duplex a year for 10 years. It's very simple. Anybody can do it. So year number one, we did one. Year number two was good. Year number three was good. And then the business plan got diluted a little. So we went and bought a fourplex. And the fifth year, we bought a single family home. And the sixth year, the lender started working with us. They told us we can't give you any more money. And that was when I hit the wall. So I ran out of all my resources, and the business is supposed to get simple after as you go by, but it was getting a little more complicated. And so I was able to pull through for 10 years. And at the year number 10, 10 years is a big number for anyone to being in business. And that is when I had to revisit what was I doing wrong. And whatever I was doing was right, but it's going to take a little longer than what I expected for me to get to the financial freedom numbers. So, and that is when I started networking with a lot of meetup groups in Austin and started learning a little more about, I discovered something called syndication, and I felt like I spent 10 years trying to do everything on my own. And that was a game changer. And I read a few books on commercial investing from Dave Lindahl and our ex-president, Mr. Donald Trump. And that got me more excited. And I joined that program, mastermind program from Dave Lindahl. And the rest is history. I decided to stop chasing too many rabbits and got myself focused only on multifamily syndications. So that was 2020, and we are at the 2022 Feb right now. So in the last 2 years, I've invested in 8 different syndications, of 4 as a limited partner and 4 of them as a general partner. And this is where we are. That has been my journey in less than 5 minutes.
I love it. Well, thank you. Let's. I do have a
Uh,
few pieces of that I would love to dive into and maybe get a
right.
little bit more detail. But so, where were you living before the move to Texas? You mentioned that you were working for Salesforce for roughly 15 years, but where were you moving before you moved to Texas?
Well, I used to, when I came to US for the first time, that is 2020, I came to San Francisco, California, and I met my wife in Louisiana, and we got married in 2005.
Mm,
And from San Francisco, we moved to Central Texas, that is North Austin.
okay. Great.
And I've always been self-employed. I really wouldn't know how a W-2 employee is because I've never been there.
And so when you say that you worked for Salesforce for 15 years, it was still, you were an independent contractor
Yes,
working on the Salesforce platform, correct?
yes,
Okay.
exactly. That's
Yeah.
what I did.
So you've got this entrepreneurial bug inside of you that you probably, like many of us that get into the real estate space, you're probably unemployable as a W-2 employee, that's for sure. So let's talk a little bit about this duplex aholics
Right.
and did you have anybody in your world that was investing in real estate? Anybody in your life that had sort of gone down that path before you? What caused you to decide, hey, real estate is I can see real estate as a pathway for me, to build some wealth and some cash flow in my world? What got that started for you?
That is a very interesting question you brought up, David, because what got me interested and who influenced me into investing in real estate is basically growing up, my grandfather had built 25 rental properties. This was about 50 years back. And I never knew that he was mentoring me all along. I mean, it is a typical landlord, mom and pop operation. So he told me, go knock on the tenant door number 22, ask them for rent. And I go there, I get thrown out by the tenant. And these are the little things which I never realized, which will help me after 30 years or 40 years. Now
Mm,
looking back, so collecting rents was a problem and dealing with tenants was a problem and make ready was a problem. We had to do everything on our own. And that properties are still existing in India, may not be in the best of condition, but they're still cash flowing after
mm,
50 years because the location was fantastic. And when I came to US and I had taken a break because I went to school, I went to college, and then everything was at the background. And I didn't pay too much attention to that. And after we got married and moved to Texas, and we were looking at the rental properties, renting an apartment. And that is when it all came back together. It will wait a second. Why don't I do the same thing what my grandfather did? And I've been doing business in US for the longest time. And doing business out here is the best thing because all the systems are in place and nobody is going to break your arm or twist your arm. You do everything right and you have all the people to support you. And so why shouldn't we invest in real estate? And that is how we got started.
yeah, that's a great story.
Right.
So you can attribute it back to your grandpa buying those properties back in India. That's a great story.
Right.
Um, so your thesis was we'll buy one duplex for 10 years.
Right.
A few years in, you ended up buying a fourplex, and then you ended up buying a single family home. Ultimately, ran out of financing at that point in time. Banks decided that you had too many properties. And then you got involved in a meetup in Austin, and that exposed you to the syndication world. You read some books, and then you mentioned that you transitioned and really started to focus on multifamily in 2020. How much time went by from the time you uh, got involved in the meetup group before you decided multifamily is where I'm gonna, plant my flag and really focus my efforts?
So, so in 2018, when I filed my taxes, company taxes, and that is what got me more curious to find out, to dig deep into what was Duplexaholics doing and why we were not cash flowing. And in 2019 is when I started looking up as to typical meetups and how do people really buy these apartment complexes, the 10 million, $20 million deals? Where do they get the money from? And then I came across a few groups on the internet, and one of them was called Lifestyles Unlimited. It was based out of Houston. So I did attend one of their 2 day seminar, and then one thing led to another. I met a few people there and asked them, do they meet off outside of this training? They told, yeah, we have a few meetups, we meet there. So I went to one meetup, and I love to network all the time. So I'm already always meeting people at different locations and different platforms. So I asked those people, where do you guys meet? And they told me about another meetup which meets every week on a Tuesday at noontime. And till date, I'm loyal to that meetup because I call it at my hometown meetup. Okay. And after this podcast, I'm heading there to Austin for the meetup.
Hmm.
So, and that is where I met a lot of interesting people who are already were active investors and passive investors.
Hmm.
And through that meetup, I still maintain relationships with a lot of people out there. And even before I joined any of these mastermind groups, I decided to invest in two different syndications as a passive investor.
Hmm.
And I also a big fan of Brad Sumrock. He's based out of Dallas, and I attend most of his events. And connected to a lot of his investors out there,
Hmm.
and that is how I got to know. And then I never realized for 10 years. I tell people I'm a slow learner. It took me 10 years to realize that there's a better way to do business.
Hmm. Well, uh, I think a lot of people have the same experience as you do.
Right.
And I'm curious. So you ended up making that transition 2019, roughly when you started to become exposed to this concept of syndications. You started to get involved from a LP perspective or a limited partner or a passive investor perspective. So you invested passively in someone else's syndication. Um, I'm curious, did you end up hanging on to the duplexes, fourplex, and single family home, or have you sold those properties?
Now we still hold this portfolio, and because the reason being, we already established credibility with the financial institutions with whom we've been working with, and I want to take that to a next level. So what I did is we still hold on to that portfolio, but we don't spend so much time in buying assets in that. But then we realized that for some point, it's okay to have diversification within real estate. So we have that as a portfolio for single family duplexes up to a
Hmm.
fourplex. So anything which is less than 5 units, we just push it to Duplexaholics because that company has an history with the bank and it has enough credit. And the same financial institutions who refused to give us money, I'm still working with them. But now, after I decided to come into multifamily, we started another company called PGL Properties. So PGL, what does PGL mean? So PGL stands for Pretty Good Life. So that is what we are looking for.
I like it. I like that. That's clever. So, you held on to the small multifamily and single family portfolio. You become exposed to real estate syndications, And you mentioned that you invested in a couple as an LP. What was your first experience like on the GP side of a syndication? What was your role? What type of deal was it? And yeah, tell us a little bit about that first experience and how you got involved with a deal as a GP.
That is a very interesting question you asked, David. I get really excited about my first deal, and so this was a since I network all the time, and I'm telling people what am I looking for, because what I've realized, even if you walk into McDonald's, if you don't tell them what you want, they're not going to give you anything. They're going to tell you, "Okay, David, can you move ahead? We have other people." So that's what I realized in life. If you want anything, you got to put it out there. You got to tell people. You may not get it right away, but when the time is right, they'll come back to you. So, so I was telling everybody at the time what I'm looking for is to be a general partner in a deal, and and there was an opportunity of 232 units deal in Houston. So the sponsor approached me asking me would I be interested in raising capital on the deal, and I've never done that before. So I was excited at the same time scared to say yes
Mm-hmm.
or not to say. I told,
Sure.
well, out here, I've been presented with an opportunity, what I've been waiting for all my life. And what am I supposed to do? Should I take a step back or take a step ahead? So I decided, you know what? What's going to happen? I'm going to fail. I mean, that's a feedback. At least I can work on it on the next deal. So I told them yes. So I got onto the GP team. They wanted me to bring capital to the deal. So that was a great learning experience. And after that, I loved the process, and I enjoyed how the whole all this so many moving parts come together. And that is what got me started. That was a 232 unit deal. And why I still like the deal is basically it was in a hot market, Houston, and we I got exposed to the deal in 2020 September, 2020 September, and we did a due diligence in 2020 October. So I went to the property, I met the whole team, and we walked all the most of the we walked on the side of the due diligence team, and we worked on the investor packet. And this is all new to me. I've only read all this in books, and
Yeah.
this is the time. It is a case study. It is boots on the ground and all these terminologies I had to learn. And then that is when it clicked. It is a process. It's an entire process in itself, and I need to pick and choose which one is exciting for me.
Mm.
And I felt this capital raise, bringing capital to the deal was the most exciting because I was able to touch upon all aspects of the deal. I need to trust the sponsors. I need to do background check on them. Would I really invest in the deal? That is the next thing. And the third is why would I invest in that deal? What is so exciting about that? And how did they buy the deal? And what is the business plan? And what is the exit strategy? If I'm not convinced in all these things, I can't come to you and say, David, can you give me money into the deal? And you're going to ask me how much skin I have in the game. If I tell you, no, I don't like the deal, but I want your money. So, so what are the chances would you ever pick up my call again later?
Yeah,
Right.
absolutely.
So that is what I liked the process, and that turned out to be one of the best deals I got into
That's
because
great.
that was an off-market deal. That was a mom and pop operated for 20 years, and the occupancy was 80%.
Mm.
And and out of the 232 units, 150 units were classic units, and and we had to all we had to do was raise the occupancy and bring the rents up to the market. But we did the investor webinar in the month of November 2020, and after that, things started taking a ugly turn out there. Christmas came, the New Year, the holidays, and the Texas snowstorm happened.
Oh,
Okay.
that's right. Yeah.
we were supposed to close in Jan. We ended up closing in March or April. And whatever promises we had made to the investors, that everything was out of the window because we didn't close on time. And Texas snowstorm happened, and two buildings were damaged.
Mm.
So everything, the business plan is out.
So how
So
did you navigate that with your investors?
well, we had to be upfront with them. We had to be the total disclosure. We had to tell them, listen, we did not lose this deal, but these are the challenges which are thrown upon us, and none of us expected this. But we are working through this. But the insurance is willing to work with us. The seller is cooperative. The seller is also willing to work. But we had made commitments to all the investors that we're going to bring up the occupancy to 90% in 90 days. So we told them 90 on 90. But and that we are working towards it, but it did not happen in 90 days. It happened in 120 days.
Hmm.
So, but till date, that property is we got it at $85,000 a door,
Hmm.
and in Houston. And at that time, the properties were trading for little over north of 120.
Yeah.
So that's what I realized. What I learned in 10 years of being in single family. There are three ways you make money in real estate. The first time when you make money is how you buy a deal, and number two is how you operate a deal. Number three is you make money when you sell the deal. So the rest everything is gambling because you wait for market appreciation. That is gambling. That is not me and you can't do anything, right?
Yeah.
That's
Absolutely. Well, that's interesting. Thanks for diving into that a little bit. I'm curious about your experience on the capital raising side of things, and you mentioned that that was a space that you really wanted to lean into, that you found interesting and intriguing because it allowed you to touch on all aspects of the deal, but also lean into something that you felt like you had a skill set for. So I assume that that's also been your role, in addition to bringing other items of value to a GP team in the other three deals that you've done, because you mentioned you had done four where you have been a co-GP or a GP on those deals. Is that correct?
yes,
Okay.
that's good.
So let's talk a little bit about how you go about raising equity for a deal. You hadn't done it before, 2020. You've done three since. What have you learned in that period of time that our listeners could potentially take away to help them in their own efforts to raise capital for the deals that they're working on?
Well, thank you, David. Yeah, so it's what I realized is it's a process. It's a series of. I'll have to be extremely consistent in what I'm doing. I'll have to practice what I preach. That is number one. And if I'm not confident about of taking you from Utah to Hawaii, and you're not going to get on my plane. And even if I tell you, David, I've been working all my life to become a pilot, and now I'm a licensed pilot. You're going to ask me, how many hours have I? What is my experience? If I tell you, David, don't worry, you're in safe hands. This is my first flight, but I've been working all my life for my license. So how much confidence would you have in me? Even though I'm licensed, I've done everything right, right? So that is exactly what happens with an investor when I go to ask them for money. First thing they ask me, how long have I been doing this? And the next is they're going to ask me, what experience do I have with multifamily apartment complexes and working with this operator? And how much confidence do I have in this operator? So that is number one. Number two is the investor does not know anything about this business. So they're not going to say invest in this business. So that is my responsibility to educate them. And I need to give them that confidence. See, any question is a good question. There's no bad questions. So I need to give them that space. I need to motivate and encourage them to ask me those questions. So I encourage them with all this. I educate them all the time. And number three is stay in touch with them. Stay in touch with them because most of us uh, meet the right contacts, but we don't stay in touch with them. We don't keep them educated. Life happens because people move on, and if they get hungry, if they want to invest, they'll look for the nearest deal who's been in touch with them all the time, and they're going to invest in that deal. So, so that's what happens. And where do I meet these investors, and how do I stay in touch with them? Because life and business, what I've realized, happens all through relationships. No matter what technology you have, we are all humans at the end of the day. We like to work with people whom we like and trust. And how does the like and trust come into picture? I need to know them well. And how do I know them well? So that comes down to the quality of your contacts and not the quantity of your contacts. So
Hmm.
with the quality of contacts I have, I need to make sure I'm constantly in touch with them one way or the other. Because deals are not happening every week for me to tell them, this is the deal happening. But deals happen once in 3 months or 6 months, or sometimes nothing happens for 8 months, right? So what do I do in between these things? So I find a way to stay in touch with all my investors. And how do you find a way to stay in touch with all your investors? Everybody is creative in their own way. Okay. So I meet investors at different occasions, different levels, and different platforms. And I could meet investors at my running club, at my CrossFit, with my daughter's parents teachers meeting. And I could meet someone in my neighborhood. I could meet anyone at the meetups. So that way, there are people are everywhere. It's just that don't force yourself to tell them what you're doing, but let them talk. Let them talk. So I tell people, well, you got to let people talk, because it's I use this for acronym called FORD, FORD. It's very simple. Anybody can do it anywhere in the world. And F is for family. Everybody wants to talk about their family. You ask me about my family, and I would speak about it all day, about my dogs, my daughter, and my wife, and the holidays, everything. So family, that is F is for family. And O is for occupation. Everybody has an occupation, which sometimes they like, sometimes they don't like, sometimes they're excited. So they would talk about it also, and how they got into, and why are they doing what they're doing. And recreation. Everybody has something outside of their 9 to 5 job, which they do on the weekends, or which they're thinking about doing one day. So recreation. And D is for dreams. Everybody has a dream. And I have never met anyone who doesn't have a dream. Everybody has a dream. So even if one sticks to it, they say, how do I build relationships? This is a very simple thing. FORD. That's it. And it's easy to remember, like an automobile.
Yeah.
Right.
Yeah, no, that's a great strategy. It's so simple. Sometimes we can overcomplicate
Right.
building relationships, and you mentioned just listening and letting people talk and asking good questions. And those good questions, the FORD is a great reminder of things that people like to chat about and allow you to get to know someone on a deeper level and really make a connection that will garner trust, because it all comes back to whether or not they trust you in what you're doing from a professional standpoint, and do they want to be involved in what you're doing. Well, look, Vish, I've enjoyed our conversation. We're running short on time here, but I've got a few final questions that I want to ask you before we end. The first is, what's the biggest challenge that you're facing right now in your business that we could all learn from?
Well, my biggest challenge is, it's a challenge and an opportunity. So one is, how do you identify the right partner? How do you know is he or she is the right person to work with? That is a challenge in itself. And does this person walk the talk, or he's just talking? So that is, how do you authenticate that credibility? How do you validate that credibility? And the next challenge is, I mean, this is a people would think that, oh, I know there's no deals in the market, everything is overpriced. No, the like as I told, I stress a lot on relationships. Everything happens to relationships. So most of the deals happen not from the listings what you get on your email. It is through off-market deals. There's something called off-market deals. And why will someone give you an off-market deal? Because I know you can execute or close on that business because you've done business with me in the past. And so that is why it is challenging enough to build relationships, but that is something worth it in the long run. But I would stress on that. So that is what I do.
What's something that you're doing really well in your business right now? Something that you're just knocking out of the park that we could all learn from?
Well, whenever I talk to people, what I ask them is, what is your one strength? If I give you five choices, a choice of five to get into the syndication, you need to pick only one. What is that one thing you would want? By asking them that question, the next time if I have a requirement or if I'm putting a team together, I can fall back on that person and ask them. So why do I ask them? Because for me it is all the investor relations and bringing capital to the deal. But for you it could be underwriting. But for somebody else it could be marketing. But for another person it could be asset management. So that way the reason for me asking this is I'm able to bring in a sponsor or put a team together in less than a few days.
Hmm.
Because how do I do that? By asking these questions. Because I know some people who never done a deal for a while, or why when I get to know them at a different level, at a personal level, they tell me they're extremely good at underwriting, but they don't like to talk to people. So that is their strength. Underwriting is their strength. So I can fall back, I can talk to them, I can partner with them, I can bring them on a team.
Yeah. Yeah. Love it.
Uh,
Well, Vish, I appreciate your time today. I've enjoyed our conversation, learning about your story, and hearing about some of the tips and strategies that you've developed to help you, communicate challenging circumstances to your investors, how you get to know and build relationships of trust with your real estate investors, and some of the things that you are doing really well in your business and challenges that you're facing. How do you vet operators? How do you get to know them? And then, ultimately, you can tell that you're just a genuine individual that really likes to connect with people, get to know them, and bring people together to accomplish a goal. And so I appreciate you sharing some of the details around that. What's the best way for our listeners to connect with you and learn more about what you have going on?
well, the best way for them to connect would be on LinkedIn. They could look up by my first name is Vish, and my last name is Muni, Muni.
Great. Well, Vish, thanks for coming on the show. We'll have a link to Vish's LinkedIn in the show notes. Go down into the show notes right now, click on that link, and connect with Vish. Vish, again, thank you so much for coming on, sharing your journey with us, and I look forward to connecting with you again soon.
Yeah, thank you, David.